Give me a few minutes and I'll walk you through a simple, rules-based setup that only takes trades when the market is actually participating. One tool reads volume price behavior, so we avoid dead tape. One prints the buy-sell switch, and one keeps us aligned with the trend. I'm on GBPUSD 1 hour, but these rules work on any liquid market and any time frame. Risk to reward stays fixed at 1 to 1.5, so results are easy to compare. I'll show one long example and one short example you can copy step by step. While you're watching this, Supernova AI bot is already trading, managing risk, and generating passive profit. 24/5 on full autopilot. No experience needed, my FX book verified, up to 15% monthly returns. Don't fall behind. Get Supernova now. Link below. Okay, back to the chart. Open indicators in TradingView. Search and add Volume Spread Analysis, VSA, by KintsugiTrading. Add Parabolic SAR by Everget. Add the Simple Moving Average. With all three on the chart, each gets one job and nothing else. VSA reads supply-demand pressure through volume and spread. Parabolic SAR provides the entry switch, buy-sell label. MA60 sets the trend bias. Indicator settings, volume spread analysis by KintsugiTrading. VSA was popularized by Tom Williams to read the balance of supply versus demand by combining price spread with volume. Increases in volume during an uptrend often signal demand strength. Spikes in volume during a downtrend can reveal supply surges and potential reversals. Open settings. On the Inputs tab, make the following adjustments. Set moving average to 200. MA1 multiplier to 0.5. MA2 multiplier 1. MA3 multiplier 2. On the Style tab, set the volume color to be clear and change the display type to columns. Reading rule. For a valid signal bar, the VSA histogram is colored yellow or red and sits above the white moving average on the VSA pane. That combination flags meaningful participation consistent with the move.
Parabolic SAR, open settings, style, uncheck PSAR, and turn off trade state filling. Reading rule. A buy label is a long trigger. A sell label is a short trigger. We act on labels only when the other filters agree. Moving average. Open settings. Set length to 60 and use a clear, visible color. Reading rule. Price above the 60 MA means bullish bias, and we only look for longs. Price below the 60 MA means bearish bias, and we only look for shorts. Execution rule for every trade. Act on closed candles and enter on the next candle open. For longs, the stop goes below the nearest meaningful swing low. For shorts, the stop goes above the nearest meaningful swing high. Target is 1.5 R. Long setup checklist. Trend filter. Price is above the 60 MA. VSA gate. VSA histogram is yellow or red and above the VSA moving average, white. Trigger. Parabolic SAR prints a buy label on the signal candle. All three must be true at the close. If anyone is missing, we do nothing. Long example. Price breaks above MA60 and holds. A shallow pullback respects the average from above. The next push builds, and VSA prints a yellow-red histogram bar above its white moving average, signaling real demand. On that same candle, Parabolic SAR prints a buy label. All checks align at the close, so we enter long on the next open. The stop goes below the pullback swing low. Use a clear pivot, not a tiny wick. The profit target is set at 1.5 R. Typical path. A brief pause while the level is tested, then continuation as VSA stays constructive and price holds above MA60. The position reaches target. Quick tip.
If the VSA bar turns yellow-red but sits below its own MA, wait for the first bar that is yellow-red and above the VSA MA. That small filter improves quality. Short setup checklist. Trend filter. Price is below the 60 MA. VSA gate. VSA histogram is yellow or red and above the VSA moving average, white, signaling active supply in context of a down move. Trigger. Parabolic SAR prints a sell label on the signal candle. All three must be true at the close. If price isn't below MA60 or VSA isn't qualifying, we wait. Short example. Price trades below MA60 for several bars. Bearish bias confirmed. A small bounce retests the average from underneath and stalls. Our signal candle shows a yellow-red VSA bar above the VSA MA, indicating meaningful supply activity into the bounce. On that same candle, Parabolic SAR prints a sell label. Conditions hold into the close, so we enter short on the next open. The stop goes above the bounce swing high. The target is 1.5 R. Two common outcomes. A steady slide that tags target while VSA remains active and price holds below MA60, or a quick pop that hits the stop. Both are part of the method. Our job is to take only aligned setups, keep risk per trade fixed, and let the math play out over a series. Final recap. VSA is the participation gate. Take longs only when the VSA histogram is yellow or red and above its MA in a bullish context. Take shorts only when yellow, red, and above its MA in a bearish context. MA60 is the trend filter. Above it, we only look long. Below it, we only look short. Parabolic SAR is the entry switch. Buy label for longs, sell label for shorts. Trade the plan, not the impulse, and let consistency over 50 to 100 trades reveal the edge.